Hello guys, so here I'm here to discuss one of the most important concept, maybe in the field of stock markets, but it is much more used in case of the cryptocurrency world. It's a pump and dump, pumping and dumping the cryptocurrency. So what majorly happens? It usually happens in mostly all the cryptocurrency per se Bitcoin as well, but majorly in terms of altcoins or some meme coins like the Shiba Inu and different stuff. So what majorly happens? All your top people, all the internal management of various companies, all the people tend to corner the market. And what do I mean by market cornering? Some of the big people having a large amount of money, like Mr. Elon Musk as well, like I have been tweeting about the different altcoins and cryptocurrency over the previous years to accepting as a mode of payment, and then he cancels it all. And so the major people who have huge chunk of money in the market and who can really create an impact upon the crypto world, having millions or billions of dollars, because a person investing hundreds and lakhs won't be creating impact. But those people who tend to come together in the market, put in billions and billions of dollars, can move the crypto market up in one single day. So what majorly happens, these people tend to purchase the cryptocurrency from their very scratch, from the very fall, at the time when it is trading at almost zero. So for example, here from an example, we see hypothetically, if a crypto is trading at a $10, the crypto market has come down. It's almost in depression. It has almost crashed or fully crashed. At that point of time, these people will tend to corner the market. Big institutions, big people who have been involved and want to make the money and want to make a fool of the retail people like us will start purchasing this cryptocurrency. They will start purchase slowly and slowly. The price will start to rise. Once the price start to rise, we as the retail investors will commit the mistake. We will wait. We'll say our cryptocurrency throws so risky. Let's see, like if it rises again, we might believe it might fall. But till that point of time, they're already making gains, unrealized gains. They're buying and buying more in billions, and they're almost reaching at the top closer to this $1,000. But we as foolish, as poor retail people, we tend to buy somewhere near the $1,000. Where already a stock or specifically the cryptocurrency has reached that high. We start to purchase at that point. And what happens at that particular point of time? These big people who have cornered the market tend to sell off the crypto. And we as the retail people tend to suffer a crash. So basically those guys have also taken money from our pocket. And this mechanism very popularly is called as pump and dump. First, the crypto market is pumped by buying by market cornering by big people. We as the retail people get those information later, we track the market later. At that point of time, it has almost reached at that all-time high at which they're about to sell. He purchased at some 990, 900. 1000 pe aate bar they like sell it off, and the price comes down to not even the previous buying price of $10 to $5. Many people sell off their own. They take margin calls, they take leverage to purchase these, and those people come on the roads on account of crypto. And many peoples in thousands have come on roads because they sold off their house, they took loans, they took leverage to buy the crypto, and this pump and dump scheme happened. So be aware about this pump and dump mechanism very popularly being used in the world of cryptocurrency. Thank you so much. It's all for today's session. Thank you.